Good morning, everybody. Welcome to the Lock in Your Success Options Trading for Income weekly update for August 17th, 2015. Before we get going, we would like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware that the risk of options, trading options, is substantial, and be aware of all your risks prior to placing any trades. And also that we are using hypothetical computer simulated performance results and or trades in the presentation. However, they are believed to be as accurately represented as possible. Before we get going too much, please consider joining our mailing list and visiting our website at lockinyoursuccess.com. Get your free report, The 7 Secrets to Becoming a Successful Trader, and sign up for this free weekly webinar. And while you're over there, you can check out our programs. We have the super simple spreads. We have the M3, the Bearish Butterfly, the Rock Trade, the M21 program, and the 8 p.m. Squared program. All great programs there. And stay tuned for our programs currently under development. We're working on the trading triangle stuff for the remainder of the year and the beginning of next year. It's going to be a great program, very large program, and that'll be a lot of fun. Also, we got some directional spread trade stuff coming out, and we got some other good things that may actually jump ahead of that, so it should be lots of fun. If you are not aware, I do Monday mornings after this update at 10 o'clock with Options Tribe. For premium members, I do a $1.25 million M3 style trade that is live, and we have a bit of a question and answer session with that. And if you'd like to get involved with that, you can join the Options Tribe at the website below here, smbtraining.com, blog/join. And of course, if you're participating in the Hawaii 2016 challenge, then make sure you send in all your results. And this is my contact information here. Okay, so let's just start talking about the markets here a little bit. Last week, I was expecting the market to end up higher than it started, which did happen. However, it was a little less than impressive, as they say. I was expecting the market to be a bit higher. Wasn't expecting, I'm not surprised, but wasn't expecting this move down to 1190. Like I said, this has been the primary support area which we've had marked out. So not too surprising we hit that. Mainly due to bad news, right? We had some news come out that that kind of pushed stuff down intraday. But that didn't hold any. So, we're still, as far as I'm concerned this week, we're still kind of on the track that the markets are likely to move higher. The markets have been a little bit weaker than I have expected. Again, that's not such a big surprise. It is August. August tends to be a down month, tends to be relatively flat, at least in the beginning of the month. Usually sometime in September or October, we're going to get a very, very large significant move in the markets, normally to the upside. We'll see if that happens, and I do expect that to happen. I expect a short-term up move. Like I said, still expecting the NASDAQ to tag new highs. It's just a matter of when it's going to happen. So that's essentially what I'm thinking on the markets. Flat for now, but I am aware that I'm enjoying the sideways movement or the lack of enthusiasm to the upside, as they say, but I don't expect that to last too long. So as far as trades go, we were actually only in a single trade for August, and that was this M3 trade, which as of Monday morning looked like this. We were jockeying us around a little bit, being close to expiration, and having the market. It's had a significant drop in the last month or so. So here is what the position looked like coming into the week. Of course, from Monday to Wednesday, we got nothing but down moves, which basically helped the position. And then by I think it was Wednesday, I closed the position out Wednesday afternoon on the 13th. So if we come to the 13th. We are up past the profit target towards the end of the day, and this trade was simply closed out. So not a lot to talk about there. Overall, August was a fairly good month. Let me just show the TLOG for this particular trade. With the exception of the V condor was a little bit problematic and ended up in a bit of a loss. But here's the T-log for the M3 in August. If we take a look at how August did, and how we're doing for the year for that matter, we had a bearish butterfly that was closed early. Again, because the markets didn't move very much, we ended up with a 20.5% planned capital gain with only 1/3 of the position in, which is very good. We have the M3, which ended up at 12.7%. We have the rock trade, which ended up about 10.4. Again, that was closed a bit early, and it was closed at a lower profit target because we were rolled back into we got rolled back into a higher volatility position, and the V trade ended up at a 5.3% loss. So overall, we had a very good, really the best M3 trade of the year on the website trades, and we had rock trade was good, bearish butterfly was good, and the V trade took a loss. Overall, we're doing very well for the year. We're looking at on planned capital 82.7% on a bearish butterfly. M3 is about 46.2. We got the rock trade at about 101.6 and the V trade at 31.7. So everything's doing as expected. Like I said, long-term numbers, this is what I expect out of the year. We're almost there with the bearish butterfly. Essentially, if we make a little bit more and don't have many losses or are able to maintain that level, then we'll get our expectations out of the bearish butterfly. M3 is close enough. We're likely to hit that number. Rock trade is very likely to hit that number, and the V trade, well, we'll see. The V trade is certainly within range of that, but we'll see how that goes. It doesn't, like I said, condors in general don't like this volatility chop stuff. So that's where we stand for the year. Now, as far as September, we don't really have a lot going on there because, like I said, the markets have been very, very flat in general. And we've been getting some intraday moves, but end of day to end of day, which is what we basically pay attention to, hasn't been moving a whole lot. So if we take a look at our September bearish butterfly, this trade was entered on the 24th. Again, the market hasn't been up enough to scale in anything, so we're just sitting here at 1/3, up about almost 10% of our planned capital number. Well, it's a Thursday. Friday we got hit on that a little bit. So here we are in September. We're down about $3,900. Position looks like this. This is a situation where I do get concerned with a bearish butterfly. We've been in a relatively sideways or down market for a while. We're at support levels. We are getting like 35 days to expiration. If the market really takes off here, from a bearish butterfly perspective, that would be problematic for us, especially if the markets, if we come to the charts here, want to make a run for this 1280 level, which I'm fairly confident they will do in the next month or so. That will cause a problem for this particular trade. This is going to have a challenge keeping up with the markets to 1280 if it is an aggressive move. If it's a mild move, relatively normal, should be okay. But if something comes out and we do get an aggressive move up there, that would be concerning. So, if I was live trading this, I would certainly consider starting to cut my delta numbers back, maybe push this into an M3 with an up move, with where it's going. But that said, we are going to follow the regular program bearish butterfly guidelines. The results will be what the results will be. As far as a M3 trade for September, again, no problems here. I don't believe there were any adjustments with this. This was entered on the 24th. We have had no adjustments. Our delta is within range. We're sitting nicely pretty much in the center of the position here. No big deal. We're starting to get a gamma trend issue, which we will deal with if we stay here too much longer. And that is that. Then if we take a look at our September V Condor, again, this kind of got whacked with a hard down move right after it was added. And again, they don't like that. So we ended up buying back 2 of these 1160s earlier, not this week. That happened on, let's see, that happened on the 27th. But last week there were no adjustments. This is what the current position currently looks like. Not the best trade, but we'll see how it works out. A lot of times these work out fine, so we'll see how that goes. We will be initiating trades, our October trades, on Friday. We'll be initiating the September rock trade on Wednesday, which is going to be 30 days to expiration. Okay, so just a question, would I consider taking a reduced profit on a September bearish butterfly? Yeah, I mean, I'm not going to necessarily push a trade where the market's been flat. You know, what happens is we get this area where the market starts to flatten out here and run sideways. And like I said, the August bearish butterfly, we didn't have to make any adjustments. We didn't have to scale in, didn't have to do anything. For that to happen 1 month happens 2 or 3 times a year sometimes. For that to happen 2 months in a row starts to get very unusual. So yeah, I do get concerned with the market really taking off. So I'm going to take some sort of a precaution, whether that be exiting early, which you certainly could do, or like I said, the other alternative is just to limit your upside delta, push it into more of an M3 type of a trade until you get up into the 1260, 1270 level, in which case you can push it back into a bearish butterfly again if there's time left. But from a planning point of view, that's how I would have planned out a bearish butterfly had I entered. That said, I don't know what the entry date was, but it wasn't the best day to enter a bearish butterfly to start with. I believe entry date for our September was probably here mid-July, and I don't think, let's see, well, we can tell what the price was by where we entered. If we entered the bearish butterfly on September bearish butterfly with a strikes of 1200, we were probably at around the 1230 range when we entered. So that's going to be, well, that's not the worst entry, but certainly not the best either. But anyway, from a technical standpoint, it's not the best entry, but it worked out very well thus far. All right, so that's all the positions we have. And from a technical analysis standpoint, I kind of pretty much told you what I was thinking. Bullish coming forward. How would you deal with the gamma trend problem to the upside for the September M3 if the market hangs around the middle of the tent? All right, yeah, so there's 2 ways to deal with that. If we have an M3 trade here, like this, one way is to simply roll the position back, right? So if I'm sitting here in the middle of my tent, I have too much gamma to the upside, I have too much to the downside. Essentially, I just roll this back. I would take this, I'd close these butterflies out, or roll back part of the position, close out some of these, and of course do this in a delta flat manner, but close these out and bring them back another 20 points or so. Add some verticals in, that'll flatten you right out to the upside and keep you about the same here. If I'm up here in the tent somewhere, if I get up to 3/4, then you can just do it with verticals. Or if I'm exactly where I am now, I can also do it, another method here. I can also do it just by rolling these back. Right, depending on how deep in the tent I am. I wouldn't want to do that, but I could do -5, maybe +5. You'd want to play with it, but that'll take the upside. That'll take the gamma right out of the trade. Rolling it back will also take it out. If I was back near my short strikes, I'd probably or maybe even below my short strikes, I'd probably tend to roll it back. If I'm up where I am right now, I'd probably tend to not do 5, but maybe bring in 3 or something. Right, and that'll just start to flatten us out a little bit without affecting our downside too much. Right, see, I just took away the problem. So that is that's that. All right, so close. What's my preferred entry point from a price technical level? If I wasn't going with a regular trading plan, I want to change my trading plan. When would I want to enter a bearish butterfly for October? Well, one point here would be at this. Sorry about the screen blank out, not sure what happened there. 1 point would be up here at the back of this trend line, although that's a touch risky, but that would be a legitimate point to enter if you were bearish. If I was bullish, I'd probably want to be up at the 1270 level before I put it on, if I was going to time it. But again, if you're doing a monthly, every single month, then we just do what we do. All right, so it looks like that is all we have for questions. It has been well, a relatively quiet and good week here. Hopefully we can get to another good week coming into August expiration for those of you who are still in August. And just watch out for a relatively large move coming in at some point in September. Sometimes they don't happen until October, but usually they happen end of August into September when the kids go back to school. All right, I just got a question. Can I go over why I'm buying in the money long calls at a 95 delta versus a 90 delta? All right, so in the core, let's see. Here's the M3 trade. In the course, in the video course, you have to remember when it was put out. It was put out when the market was relatively sideways. So in the video course, we were talking about doing calls maybe up in the 80 delta range. Nowadays, we do stuff back down in the 95 delta range, sometimes even higher than that. So let me just talk about how I look at this long call. This long call is the purpose of the long call is simply for delta correction. That's all it's for on a butterfly, to offset the delta correction. If you buy that, a couple of ways. Being a delta correction, I see it as one thing. I see it as a drag on the trade. In other words, anything I buy in the form of time premium, anything over its extrinsic value, and even if it's zero, it's still a drag on the trade, because a lot of times you'll end up with negative time value when you go to sell it if you don't expire it. There are ways to get around dealing with that, but let's just say this has a theta, what I call a theta drag on the trade. It's dragging it down. The higher you go or the lower you go in delta, the more of a drag you have. In other words, if I buy an 80 delta call, I have to overcome $835 is going to bleed out of that trade before it even makes any money, right? So that's pulling cash out of the trade. It makes it less efficient. If I go deeper in the money, it becomes a lot more efficient. If I go deeper in the money, it also costs more money. Generally not an issue. If in other words, we have planned capital, and the planned capital accounts for the money that draws up. So so that's not an issue, but it does make it more efficient. Everything comes at a cost, and everything comes at an expense. So by making this more efficient, I'm going to make the trade better if the market goes up. I'm going to make the trade better if the market sits, because I'm not bleeding off time value as time goes by on my call. The downside to that is if the market comes down, I have more total risk, and I have risk for a longer period of time. So if I have a call here and I analyze my trade, let's see. And I analyze my trade, I have to, let me just zoom this out again. The market's got to, in other words, I have $14,000 I can lose to the downside, and your time premium, as you get closer to your strike, your time premium tends to explode as the market comes down, and it tends to flatten out your delta. So this here, if I'm thinking the market's going to go up, or if I'm, in other words, I'm bullish, or if I think the market's going to be flat, then I'm usually better off buying a deeper in the money call. If for some reason the market's overextended, or I have a reason to think the market's going to come down, or if I'm in an extremely choppy market where I'm concerned with the market crashing down, I'm actually much better off coming into here. In other words, I will take the drag on the trade because I can afford to do that, because the market's either going to come down into my butterfly tent if it does what I think it's going to do, or it's going to have to be rolled back, in which case this new call has a lot less money to lose. And if the market comes down quickly, I get an explosion in my volatility, which immediately flattens out my T+0 line. In other words, it makes it less sensitive, right? If you superimpose these two, you can kind of see the difference of how fast this trails off. And then if we do a, this I think this volatility thing's useless anyway, but if we want to play with that and add volatility, this will tend to flatten out faster than the other one. So that's the reason. Monday, was I don't think I was minus 143 on Monday. Let me see. Clear trades. Let me look on Monday. Let me see what Monday afternoon was here. Let's see. I have Monday, August 10th. Yeah, that's the right day. I have it as minus 29.3. My guess here is if you saw, this is a minus 143 delta. One of the things Option View has been doing is it's been losing this call. And it may have lost it on the analyze, right? Now it says it's minus 126. So it was never minus 143. No, August M3. Yeah, that is showing minus 143. So that should have technically been adjusted. Okay. So let me go back to Friday. I'm going to have to go back. What I'll do is I will go back on this and I will recheck everything. If for some reason, because this should have had a down adjustment here, and this could be something goofy going on with Option View, which happens sometimes, because as I was doing it, I did not notice that. So what I'm going to do is, what I'll do is I'll go back and I will trade this in BackTrader. If I am indeed minus 143 delta, we will make the corrections for that. That will kick us. That'll probably that might force a down adjustment on Wednesday. It might not. We'll see. And then I'll have this back and we will make the corrections for next week. So it is possible I made an error there, or I didn't notice that. So thank you for pointing that out. But also Friday, which this should have been picked up on last Monday, this was showing a positive 69.31. And that was not picked up on last Monday's update, and that's not correct either. So what we'll do is come in here. I will make the necessary corrections. I will make a note to go over that again. So we'll do that, and that may mean that we're actually pulling this thing into expiration this week. So we'll take a look at that. So I apologize for that in advance. I need to be more careful going forward, but thank you for pointing that out. All right, so that's all we have. And it looks like we're done on questions. So have a great week, everybody, and we'll be talking to you next week.